That streak that we've gone without a 5% pullback, is that relevant in your world, the way you see it?
Oh, very much so. It's a remarkable streak and really is being held up here by liquidity. There have been some other sources of gains or support for the market in recent months, reflation trade ideas, the economy itself, but both of those have faltered a bit. It's liquidity that really remains the main driver. Looking at
the technicals, Jonathan, what are they saying to you?
Yeah, the technicals remain pretty good to us. I mean, first and foremost, the trend has been unequivocally bullish. You mentioned we haven't had 5% pullback in 267 days. We also haven't tested the 200-day moving average since last November. So that's an underlying sign of strength. And then when we look across the board at breadth, we had a new high for the NYSE stock-only cumulative advanced decline line. We have about 70% of all stocks above their 200-day moving average. So as long as breadth continues, this internal rotation continues, we remain constructive here.
Paul, the DC in action, does it matter to you?
I'm sorry, the which?
The DC in action.
Yeah, that it does matter, but probably not right away. What we would need to see in the end would be some failure to produce a tax reform bill, deregulation, and infrastructure, probably in that order. And at this point, it's still reasonable to expect that they may cobble something together by the end of the year or in the winter quarter, the first quarter.
And the DC matters because it winds up triggering sector rotation. Jonathan, you brought a chart that talks about market breadth. You were just discussing that. And we saw a lot of whipsaw happening. Buy small caps, don't buy small caps. Like financials, don't like financials. Now we like them. Talk about the whipsaw that we feel sitting on this desk versus what you see in the technicals.
Yeah, I mean, it's pretty remarkable. And it's not only on an intraday basis, but just on a weekly and monthly basis. So there's always this debate, do you go in growth over value? And we think you can be in both. There's this constant rotation. So, you know, right now tech or growth is probably the strongest area of the market, but there's nothing wrong with the financials here. They're trending higher above their moving averages. There's good breadth amongst the financials. So it's this constant rotation where one group kind of may pull back a little, but then another sector or industry group takes the baton.